Welcome back to Talkpoint. Washington is back in a high-stakes showdown as Congress grapples with the U.S. debt ceiling. The Treasury Department warns that without a deal, the government could run out of cash in just a few weeks. Today, we break it down to the debate, what's at stake, and the potential consequences for America's economy. Historical debt ceiling starts past Congress seasons. The debt ceiling is a legal limit on how much the federal government can borrow to meet its financial obligations. While it does not authorize new spending, it allows the government to pay for programs and services already approved by Congress. Historically, raising the debt ceiling has been a routine procedure, but in recent years it has become a politically charged battle. Treasury Secretary speaking, charts of federal debt, social media reaction. Currently, the US debt stands at over $35 billion. The Treasury Secretary Janet Yellen has warned that without an increase or suspension of debt ceiling, the government could default on its obligation as early as mid-September. A default could trigger catastrophic consequences, including missed payments to Social Security recipients, federal employees, and bondholders, and could shake global financial markets. House and Senate sessions, lawmakers debating, news coverage. Congress is deeply divided. While Republicans are demanding spending cuts and fiscal reforms in exchange for agreeing to raise the ceiling, while Democrats argue that default is not an option and emphasize the need to protect social programs and economic stability. Lawmakers face pressure for constituent financial markets and the White House to reach a compromise quickly. Political analysts, campaign ads, party logos. The debt ceiling debate is more than just numbers. Politically, it could shape the 2026 midterms. Republicans risk backlash if voters perceive them as threatening default, while Democrats face security over raising national debt. Both parties are actually aware that a mistake could have major electoral consequences, making negotiation tense and highly strategic. Wall Street, bond market charts, business impacted. Economists warn that the falling to raise the debt ceiling could trigger a US default, an unprecedented event with global repercussions. Interest rate could spike, stock markets could tremble, and borrowing costs for business and consumers would rise sharply. Even a temporary default could undermine confidence in the US economy and the dollar, which is considered the world's reserve currency. Lawmakers shaking hands, press conference, Treasury officials. Several solutions are on the table. Congress could pass a clean debt ceiling increase, negotiate a compromise linking the increase is spending cuts, or use extraordinary measures to temporarily extend borrowing. Experts emphasize that time is critical, as the Treasury officials are already implementing measures to stretch available funds and avoid a default. Citizens in new clips, opinion polls, social media posts. Americans are watching closely. Polls indicate growing concerns about government dysfunction, while news coverage emphasizes this political potential economic fallout. Many households worry about how a default could affect jobs, mortgage, and retirement accounts. The story dominates both traditional media and social platforms, reflecting widespread anxiety about the nation's financial stability. Capitol Hill as Sargent, Treasury building, congressional facts. As Congress races against the clock, the US faces a critical decision. Raising the debt ceiling may seem like technical financial policy, but the stakes are enormous. But citizens and the company, for citizens and the company, and the economy, and the global financial system. Talkpoint will continue following every development in this high-stakes battle. Thanks for watching, and don't forget to like, share, and subscribe for real-time updates.